Welcome, everyone, to a new episode of the Transcript podcast. You've got me, Scott Krisloff. I'm editor of the Transcript, along with Eric Mokaya, who's our lead author. We sent out a new issue of the Transcript yesterday and had a lot of stuff from the most recent week of earnings in there. Also, a Fed meeting last week. We saw a continuation of the themes that we've been seeing. So, really strong economy, strong demand, tight supply chains, trying to keep up with that demand, continued inflation. And I think one of the new things or continuing things was the Federal Reserve's meeting and press conference in which Jerome Powell acknowledged the inflation, but basically said the Fed will continue on its course of quantitative easing, at least until the next meeting. So any insights from you, Eric?
I think there wasn't much surprise this week, but I think as you say, it's still a continuation of the same things that we've been seeing. One of them, of course, is that the earnings are pretty robust. I'm not so sure if the expectations were pretty low, but companies are really beating expectations this quarter. It's one of the highest kind of beat in terms of expectations in the last couple of years. As you can see, like from the few companies that you selected, MasterCard, Facebook, Apple, they are having earnings growth of around 30 to 50% there. This is one quarter, Q2, and they're lapping last year's kind of COVID period or so. So it's pretty impressive what companies are doing so far. But again, as you said, the same themes, continuing inflation pressures. I think there was that quote that you picked from 3M that says there's a lot of demand and not enough supply. So I think it's just the same thing that you see across board, from chips to products. Inventory is pretty low and demand is very high. So hopefully, like at some point, we're able to see a little bit of that becoming better in terms of supply chains and all. But I think one of the things that I picked up was from the Amazon call about labor markets being the biggest contributor to inflation. And I think something you picked up from McDonald's that actually shows that something would be getting better. Would you want to comment about that a little bit?
Yeah, I thought it was really interesting. McDonald's said that labor has been tight. It's been tough to staff, but that it's getting a little bit better. And they said, notably in states where unemployment benefits are coming off more quickly, they're seeing the situation improve more rapidly. And so as these unemployment benefit stimulus is rolling off, that may be a key element in healing labor markets. So that I thought was really interesting. Another thing that I thought was interesting that McDonald's mentioned was on the inflation front. They were saying that they didn't actually see that big of an inflation problem. And I think it really drove home one of the points that McDonald's within its market has pricing power with its suppliers in order to keep inflationary pressures lower. Mm-hmm. And yet, on the other side, McDonald's was talking about how they're raising prices by 6% year over year. So I think McDonald's is a case where you're seeing basically gains from inflation because of pricing power, because you've got costs basically being held flat, but benefiting from inflation on the other side. And so that's really interesting because, again, it's this point that inflation isn't borne equally by all actors within an economy. And actors with large pricing power actually stand to benefit from the inflation. But actors without any pricing power, which is usually the consumer at the end of the chain, is the one who eats the costs of inflation. So you also had UPS talk about that inflation is really borne by the consumer at the end of the day.
I should say that I was also struck by the two quotes that you put up there about someone bearing the inflation at the end of the day. But then again, on the other side, there are people benefiting from the inflation. And I think one of the companies which I didn't include finally in the quotes was LVMH. They say like their margins are actually pretty high, such that they actually still don't feel any sort of inflation. They are not feeling inflation that much. So as you say, like there are different companies and they're all feeling inflation at different rates so far. But I think one key worry has been, I think Pfizer mentioned there, is actually the issue to do with the Delta variant. From Pfizer, it means we do need the third dose soon. And hopefully I think by mid this month, mid-August, you should be able to get maybe a new third dose that is actually more effective towards the Delta variant that is actually increasingly being transmitted in the United States and across the globe also.
Yeah, I think Jerome Powell actually summed it up pretty well in his press conference, talking about how the Delta virus is here, but life seems to continue to go on in the United States. I think the Delta variant is in the back of people's minds, but we're not modulating our behavior nearly to the same extent as we did previously. And I think that's probably because the majority of Americans are now vaccinated, and the ones who aren't vaccinated, there's plenty of access to vaccines here. And so it's really personal choice, but it's not really impacting economic activity all that much. Probably a little bit on the margins, but it's nowhere near what it was. So
could be also people are getting used to it. It's last year was a shocker. Now it's like, okay, it's a new variant, but life has to kind of go on. And the expectations that Q3 would be key as people go, especially as students go back to school, and then maybe as the vaccine for the Delta variant, also the third dose comes into play. And as in unemployment benefits also wind up somewhere in September also. So you'll see a lot of maybe impact on some of the companies. So the next earnings calls will actually be very interesting ones to check out. One thing that was interesting was debt issuance declining quite substantially. It feels like companies have very strong balance sheets currently. They do not need to go to the market to tap into the debt markets at all.
Two things in automobiles that I think are really important. Two quotes that we picked up this week. One was Elon Musk at Tesla talking about how it seems that public sentiment towards EVs is at an inflection point. And at this point, I think almost everyone agrees that electric vehicles are the only way forward. I think that was a really important quote, just because I do believe that we're hitting this point where everyone kind of knows that electric vehicles are where we're going in the future, and that gasoline powered vehicles are not going to be a thing probably in 10 years, which is pretty crazy, but we do definitely seem to be headed in that direction. And then another quote on automobiles that I thought was really important was in the Google conference call that Waymo is commercializing. It has tens of thousands of rides that they've served in the Phoenix area now without a human driver in the vehicle, which I don't know if I'm not paying attention to the same things everybody else is, but that was news to me that they're at that scale in Phoenix, and seems like it shouldn't be too long till they're at that scale in other cities around the US and the world.
Are you
Did I
ready
just
to
miss
drive
that,
them?
Eric? Or is that was that news to you too?
That was news to me too. But I wanted to ask, are you ready yourself to check up a self-driving car?
Probably, yeah. I mean, if there's tens of thousands of rides that have gone on in Phoenix, that's really important. If consumers are getting into driverless cars in Phoenix, this is going to scale really quickly, and it's going to be a big deal and big change.
Yeah, I mean, speaking of what you talked about earlier about EV, you could see from our earnings call from Ford that their F-150 Lightning has 120 units already reserved, and 75% of them are new to Ford. So that tells you the interest is pretty high along this play of electric vehicles and autonomous vehicles going forward. Pretty interesting developments in that front.
Anything else worth talking about?
I think we've covered the metaverse before, so not such a big deal. But maybe it's that the metaverse is, I think this week by Facebook kind of announcing, especially in the earnings call, and spending quite a significant amount of time talking about it. It has now kind of entered mainstream conversation. So I think it just needed Facebook to be the pivot point at which now it shifts from being just something that nerds talk about to something that everyone wants to talk about. So the biggest question I've seen on social media and on a lot of news sites this week is, what is the metaverse? So it's now a common word. Pretty interesting that we started discussing it a couple of months ago, and now at least we're also up to speed on that regard. So I think that was very interesting for me this week.
Yeah, I don't know how long it'll be till we're all living in the metaverse, but it's really a reflection of Zuckerberg's vision. I think that he's already taking the company in that direction, because the real risk to Facebook as an organization is a phase shift in the way that people experience the internet. So, I mean, fundamentally, Facebook was a web browser enabled company and then became a mobile enabled company, and will have to become a metaverse enabled company if that's the way that we're all engaging with the internet and engaging with the digital world. So, Facebook, a metaverse company, Google, a self-driving car company. It'll be interesting to see the extent to which those sorts of changes can impact valuation on these behemoths. Are they going to be $10 trillion companies? I don't know. Maybe.
Could be in future, Amazon will be delivering your stuff through drones themselves. So Amazon may be the drone delivery company in the future. Yeah. So pretty interesting where these companies are taking. But impressively, this quarter, their growth rate is still very high, but they're also thinking long term, 5 to 10 years in terms of how they want to be. And I think that's pretty a good indication of what good CEOs. And I think we spend a lot of time reading earnings calls and management teams. The management teams that get it are those who are really focused on more on the long term, because as Zuckerberg is building for the future, 5 to 10 years. So very nice to see. So I think maybe one more thing that I wanted to touch on was the short video being the in thing. So I've been spending a little bit of time on TikTok, and it's pretty addictive. They're very short videos. And I think the algorithm gets better at curating what's really good for you. So I think after a couple of tries, they measure around how much time you're spending between videos, where you're stopping a lot, where you're rewatching. I think with that, then I realized like short video. I was pretty astonished that YouTube Shorts. I haven't tried them, but they've surpassed 15 billion daily views, and they're now available in more than 100 countries worldwide. And that's like YouTube's answer to TikTok. So it's pretty interesting. Maybe our attention spans are becoming shorter and shorter. Maybe that's why these short videos is kind of like the in thing for us now. So Instagram Reels is doing really well on that regard. So I think, yeah. Any thoughts on that yourself? Have you spent any time on TikTok?
I mean, a little bit, but I don't know how attention spans become any shorter than they are. And yet I believe that they probably will somehow.
Yeah, somehow. And YouTube and Facebook and TikTok are really taking advantage of that and doing well in that regard in monetizing short video. So beautiful things to see. So I think we can end there for this week. Thank you so much for joining us. I think this week around 150 S&P 500 companies are actually reporting. So we'll still be here trying to dig through all those earnings calls and writing another newsletter next week on Monday. So subscribe and send us your comments and reviews also. So thank you for joining us this week. See you next week.
Sounds great. Thanks, everybody.
Thank you.